Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today's Monday, August the 4th. We've got a pretty busy after hours earnings today. Could cause some measure of volatility, but in general, the pre-market action is showing our typical buy the dip formation that we normally see on these sort of declines. Now, the difference is that there's extremely high distribution in terms of volume into this area, and we are moving into an area that's seasonally weak. This tells me that we have price action that very likely should come back into the point of control down here where there was also a massive amount of selling. Now, here's the storyboard. If we hold this 62.79 zone, right, support zone at 6,280, we could have ourselves a pretty solid rotation. Also, we're sitting at the volatility marker for Monday. So traders who've sold Monday's volatility event really want price action to fall back into this value area. Okay, so the value area for the last 2 days, meaning Thursday, Friday, and this morning, pretty compact into this area. But if we look at it from just Friday, what we can see is that we're outside of this value area. And so this move here is either buyers saying, hey, we're recovering, I want to get out, or sellers saying, holy cow, we're recovering, I got to get out. And so what we're seeing is that first distribution event off of this pre-market inventory reversal, right? We just came in and started buying the dip, and that's where so many traders have been saying, hey, I'm making my money buying the dip because we've got a terminal bid under the market. Seasonality might say that that's not the best thing to do right now. So my thought is the following. This area in pre-market volume is pretty important. So again, the top of the range, 6,310, is going to be that key resistance zone. If we fail that zone in a double top, we've got ourselves a pretty nice move down into the value area here. If it holds 6330 to 6330 to 6340, going to be those levels. Opening range high, big breakout area here showing trend action, right? This is a one-way break. So high 6,266, thereabouts, low 6,251, right? We're just going to use the round numbers. Pullbacks easily could be buy zones. The volume point of control way down here at 62.65. That's probably going to give us some measure of support. And then the VWAP is 6,280. If we just look at the distribution for how they're trading this morning, we can see that there's a whole bunch of new volume over here, right? Whole bunch of new volume. This pocket still very thin. So this is a mixed bag. We could bounce right over here at this 6,280, or we could hold value area low and start building a brand new profile over here. My thought is big picture telling me what's going on. I'd like to see from the deeper spaces where the traders are positioning, and still we are sitting inside of this larger value area. Be alert. Dips could be buys, bounces could be sells. We have no idea whether this breakdown with high volume is actually going to continue or if the traders are going to move to the upside. I know that's hard, but, position properly. Where does old resistance become new support? We see some here, but my thought is heavier congestion is the better choice, and I prefer price action that sits around 6,280 in terms of a support edge. Okay? Right now, we're doing exactly what I thought we would do, which is fall back inside of Monday's volatility. Let's take a look at the Qs. So the Qs look fairly different. We've got, this is a nice picture. We've got the bullish price action event that says if we break above 23,200, we could easily get back into old resistance of 23,400, but potentially sit in this area near 23,330. We also saw that in the write-up that I gave us. If we stare down just the 2 days, however, we can see that this zone here is the most important one to hold. My thought is this is going to be a noisy patch, value area low, 22,800, a value area high, 23,200 or so. Pullbacks could be buy zones as long as we don't lose 22,940. What that's going to do if we lose that area is force us back to this value area low at 22,800, where we might see some buyers. This is very sideways. We've got bimodal distributions, which show that once we get through this thin volume pocket, we could accelerate straight back up. But if we don't, we're going to fall back into this volume pocket. So my thought is, because I'm easy breezy here, my thought is, let's take a look at the current event for the day's motion and say, okay, what are we looking at? A very thin volume area, still holding a support though, 22,950. That'd be the first place I would consider a long. I don't love the idea chasing this out above 23,075. That's the ledge where Monday's volatility is sitting. Also, the Monday IV, I just don't have it marked on the chart. Okay, opening range, remember that's moved to 30 minutes since my analysis in TrendSpider has told me that is actually the one to watch. And so what do we have as our high? 22,897, low 22,821. Pullbacks into those areas certainly are going to give us some buying pressure. Let's take a look at the YM. The YM is going to be watching the first 30 minutes breakdown, but we can see that for the past couple of days, this chart has really, it's had a rough time, right? It's definitely had a rough time since Thursday, when it had a clear breakdown, but now it's trying to hold inside of this very large value area. Look at the topping formation for the 2 days where the market really started selling. We have a value area high, 44,200, clean rejection of that area. High volume breakdown begins right here at this candlestick of 43,800. That's going to be the zone that the traders are going to have to hold as support. That's the first likelihood of a long that I like in the YM chart. Let's look at the opening range formation. We've got a high of 43,739 and a low of 43,633. Notice, we gapped down when we opened, but immediately recovered, and now all of these are holding. This volume climax suggests that this area was a potential exhaustion event. potential exhaustion event. Overnight inventory is always lower. It's bullish, but they're having some inventory correction. My thought is if it actually holds as a volume support zone, 43,800 is going to hold as support. That's 100 points of risk. If you're staring it down from the tight price action event, you can see we're looking at old support that was resistance, that tested as resistance and is now potentially at support at 43,861. Do you want to try that one? You can, right? You certainly can. Very tight volume profile like everybody else is showing. You could show that bounce from the low of the value area, which is 23,880, to the high of the value area, which is 44,012. These charts are humongously ugly today, especially since we have no clue what the traders are doing. Take a look at this wide area since the price action opened. Have a look. All of these charts have held their opening range low, right? That's normally bullish. So what the chart will be staring down, that's Europe's open. What the charts and traders are looking at is how we sit relative to this formation. Notice my supposition is the best bets long are the test or recovery of value area low, that's 114,602, to value area high at 115,150. Okay? Very, very important. There is some volume that's coming into the chart here, but notice this. For the last couple of days, Thursday and Friday, counting this morning, we are still sitting in an extremely wide value area. Now, we have lower highs and lower lows all the way through, but because we are holding the 30-minute low, pullbacks into this area should, quotations, should give us a bounce zone. And if we hold the volume point of control and get above this 115,350, buyers are going to try to force it up into the key breakdown level of 116,200. Okay? Opening range formation, high 114,990, low 114,270. Let's go to oil. All kinds of oil news in the horizon, right? Let's take a look at what's going on with these guys. Over the last several days, price action was right here. Traders, look at all of this. Value area, traders tried to hold the value area. This happened with the bounce off of the low. Got to the back into volume support. That's where all of this price action is at 67.70. You'll notice that number from last week. And now it's all the way down here at 65.89. What gives? Well, could have ourselves a fair bit of selling pressure. So notice we have a bimodal distribution. That means a pocket above us and a pocket below us. The biggest volume is to the north, right? So this is a breakdown area where accumulation, distribution. So my suspicion is we get back to the base of this zone between $65 and $65.35. That's where I'd like to see the buying take off from today. Now, could we stop shy of that? Hold this heavy congestion, dance around in here? Yes, but I have no desire to play in there. Okay? My thought is if I bounce into 66.60 and I lose it, I'm going to head back to 65.35. Okay? So That's going to be an edge for me. That's also the low of the opening range low. The high of the opening range, $67.05. Low of the opening range, $66.56. That's a pretty wide range for oil these days. And we had a double break. This is very statistically normal because the breaks, if they are counter trend, right, and I mean the opening range breaks, if they are counter trend, they will run into prior areas of resistance and then fade. And if trend is still holding, they will resume in the direction of trend. I'm not going to wait. I'm not going to trade around here. I'm going to wait for the $65 region to position a trade. We still don't have the numbers for gold. I just let support know. I thought they would sort it out on their own. Don't have anything there. Let's take a look at SPY. SPY gapped up and is holding a relative formation where you can see accumulation for since July 23rd, and now we're in distribution out of the value area, trying to carve out new zones. This secondary area of frontline support absolutely needs to hold if the buyers are going to stay in control. What do I suspect? I suspect the gap fill. Easily. I suspect the gap fill. It could head lower, but the gap fill at around $621, that certainly would be the place I would look for a long. If you're saying, well, gosh, Emery, that's $3 away. Why can't I do a short? You absolutely can. You can. But I would wait for the breakdown of this support zone at $624.80, right? I'd wait for the break that might come, and we can see we're in a bit of a distribution space, so that's pretty important. Accumulation, notice it's inside of this range. This is really tracking all the value area behavior, and now it's dropped out of the value area. It is in distribution, and so maybe they'll hold it and gap right up. Maybe they'll fade it and then gap, or maybe they'll fade it and go lower. I literally have no idea. But what I do know is that if it starts bouncing and holds this zone and breaks over the low volume node of $626, it could easily have a $2 run to $628. The markets are in a critical space of decisioning. Traders have been systematically long on every single dip. But the amount of institutional behavior in these last 2 days is different in general. And accumulation distribution over the quarter is showing negative drift. And so I would not be surprised to see us move back into the areas below. I'm going to trade very few times and see what happens. All right. Good luck trading today, everyone. Be alert and manage your risk.